Welcome back to Econverse. You know, it's going to be an interesting one when we say the U.S. stock market in 2025, right? It's been volatile, shall we say, and you want to know what's making it swing up and down so wildly, right? We've got some in-depth analyses from experts and forecasts for the market to break down the top 5 things that are shaking things up.
It's really interesting because even after a solid couple of years of gains, 2025 just feels like uncharted waters. You know what I mean?
Yeah.
We're seeing a really unique combination of events like Trump back in the White House, inflation sticking around, and the AI revolution starting to really make waves in the global economy.
So let's jump right into that first factor, the big one, shall we? The Trump factor is front and center in a lot of our sources.
Yeah, definitely.
Corporate earnings growth faces uncertainty amid inflation worries. Policy shift jumps right into how much anxiety there is about his return.
It highlights how those tariff threats remember those from his first term. Well, they're back, and they're already making businesses nervous to you. Tariffs basically mean companies have to pay more for stuff they import from other countries, and, those costs, they usually end up getting passed down to us, the consumers.
So tariffs could actually make inflation worse, which is already a problem the Fed is trying to handle.
Exactly.
And speaking of the Fed, another source, economic growth concerns amidst rate declines, points out that the market still seems a bit unsure even after 3 rate cuts in 2024.
Yeah.
It's not just the tariffs, it's also the potential impact of Trump's immigration policies on the labor market.
Right? Fewer workers could lead to labor shortages, and that could push wages up. Higher wages are great for workers, but for businesses, it can mean even more inflation. It's a really tricky balancing act for the Fed. This source even suggests they might have to raise rates again if inflation gets out of control.
Okay, so the Trump factor is definitely a big source of uncertainty, but it's not the only thing investors are worried about, right? The inflation puzzle is another big one, and it's a tough one to solve U.S. stock market turbulence. Inflation and economic concerns really emphasizes how much attention the market is paying to those upcoming CPI reports.
What's interesting here is that inflation actually cooled down for a bit, but then it started creeping back up at the end of 2024.
Oh.
And if the CPI confirms that trend, it could throw a wrench in the whole idea that the market will keep cutting rates. The source even mentions the possibility of stagflation, high inflation, combined with slow economic growth.
Not a good combination.
Not all.
Definitely not something investors want to see. Now let's switch gears to something a bit more futuristic. The AI revolution. End of 2024 market review and 2025 opportunities predicts that AI-driven stocks will have more moderate gains this year as investors start looking at other sectors. What's the reasoning behind that?
Well, AI is definitely a huge area for growth. There's no doubt about that. But it's becoming more and more integrated into the overall economy. Investors might be starting to look for opportunities in sectors that typically benefit from a strong economy here in the U.S., like manufacturing, or maybe even smaller companies that are ready to grow. It's kind of like what happened with the internet boom. You have this explosive growth, and then eventually it settles down into more measured and strategic investment.
So AI is still a major force to be reckoned with, but it's not the only game in town anymore.
Right.
Now, factor number 4, and it's all about how a small group of mega-cap tech companies, the ones in the Magnificent Seven, have way too much influence on the market.
Source points out that only 29% of the companies in the S&P 500 actually did better than the index in 2024. The gains of just a few companies are hiding how the rest are actually doing. And if these big players stumble, the whole market could feel it.
It's almost like the market is balancing on a few really tall sticks that could give way at any moment. That leads us to the 5th and final factor driving volatility, the momentum roller coaster. A lot of sources are saying how momentum stocks, the ones that are already going up, kept surging in 2024.
What drove momentum strong 2024 and what it could mean for 2025 really breaks this down. Historically, when you have a year of strong momentum, it's often followed by a pullback. They highlight this really interesting detail. The overlap in holdings between the S&P 500 Momentum Index in 2023 and 2024 was a whopping 50%.
Wow.
The same stocks just kept winning. The big question is, can it last?
So we've laid out these 5 major factors, but what do they actually mean for you, the listener? That's what we're going to explore next. All right, so we've got these 5 big things driving volatility in the U.S. stock market. The Trump factor, the inflation puzzle, the AI revolution, the concentration conundrum, and the momentum roller coaster.
Right.
But okay, we know what they are, but how do we actually use this knowledge? That's what I want to know.
Luckily, our sources actually give some pretty good strategies for navigating this whole messy situation.
Okay, so let's start with the big question mark hanging over everything, the Trump factor. With all the uncertainty around his policies, especially trade and immigration, how can investors even start planning?
Stock market outlook for 2025. How Powell, inflation, and Trump's return could affect returns. Actually has a few tips that I found really helpful. It basically says don't freak out and stay focused on the long term. In other words, don't let the daily news control your investment decisions.
So even if things get bumpy, don't panic and sell everything. That's easier said than done sometimes.
Right, it's about staying the course. The source reminds us that markets often react to the difference between what people expect to happen and what actually happens. So even if Trump's policies aren't perfect, if they're better than the market's worst case scenario, we could actually see stocks go up.
Okay, so manage expectations and try not to overreact.
Right.
Got it. But what about inflation? That's something everyone's worried about, not just investors. How do we deal with that wild card?
Keep an eye on inflation data and how the Fed reacts to it. Are they going to raise rates? Are they going to keep them the same? Whatever they do will have a big impact.
So stay informed and be ready to adjust your portfolio if you need to.
Right.
All right. Now let's talk about the exciting stuff, the AI revolution. How do we actually take advantage of this massive technological shift?
But investing in AI isn't just about picking the big tech companies that everyone's talking about. It's about seeing how AI is being used in all else sectors and finding those companies that are using it well to get ahead.
So look beyond the obvious players and find the hidden gems that are using AI to innovate and beat the competition.
I like that. Exactly. And just like with any exciting new trend, remember, diversification is key. Don't put all your eggs in one AI-powered basket.
Makes sense. Now, speaking of diversification, how do we deal with the concentration conundrum? These mega-cap tech companies in the Magnificent Seven, they're so big, it's almost scary.
What drove momentum strong 2024 and what it could mean for 2025 is pretty clear on this one.
Diversify. Don't let your portfolio depend too much on how just a few companies do, no matter how impressive they seem.
So spread the risk. Invest in other sectors, consider different asset classes like bonds or real estate, maybe even look at international markets. That's a smart approach. Now let's tackle that final factor, the one that feels a bit like riding a bucking bronco, the momentum roller coaster. How do we make sense of these stocks that are on fire one minute and could fizzle out the next?
That's what I'm wondering too. Is chasing momentum just asking for trouble?
Well, what drove momentum strong 2024 reminds us that while momentum can be powerful, it's really hard to predict when it's going to end.
So don't just blindly chase the hot stocks. Look for something more than just a rising price. But what else should we be looking at?
This source says to combine momentum with other things like value or quality. Find companies that have strong fundamentals, strong earnings growth, and maybe even a bit of a competitive edge. That way, even if momentum fades, you're still holding a solid investment.
Okay, that's starting to feel a bit more manageable. So we've got all this uncertainty with Trump, the unpredictable nature of inflation, the potential of AI, but also its unknowns, the risk of those mega-cap tech companies faltering, and the momentum game that could change at any moment.
It does feel like we're trying to put together this like five-dimensional puzzle, but I guess that's kind of the market, isn't it? It's complicated and it's always changing.
It is, but remember, the whole point of this deep dive isn't to predict the future or give you all the answers. It's more about giving you the knowledge and the tools so you can make good decisions no matter what the market does. I like that. It's about giving you the power, not just overwhelming you with information.
Exactly.
So let's shift gears a bit and talk about what we can actually deal with all this information. What are some things listeners can do to navigate these crazy waters?
Well, let's go back to the Trump factor for a second. One of the things recommended was focusing on companies that aren't as likely to be affected by trade wars or policy changes, like businesses that are focused on the U.S. market or ones in sectors that don't do a lot of business internationally.
That makes sense. So instead of trying to guess every move Trump might make, try to find companies that are a bit more protected from the potential consequences. It's kind of like building a bunker, but for your portfolio.
Exactly. But one thing we can take away is how important it is to understand how inflation affects different types of assets. Historically, some assets like commodities or real estate tend to do better when there's inflation.
So it's not just about picking the right stocks. It's about thinking about all the different assets in your portfolio and how they might react to rising prices.
Right.
Got it. Now for the fun part, AI. How do we actually turn all this excitement about AI into real investment opportunities?
Instead of getting caught up in all the hype around the big tech companies, take a closer look at how AI is being used in different industries. Are there companies using AI to make things run smoother, to be more efficient, or to create new products and services? Those are the kinds of things that can lead to long-term growth.
So it's about finding the companies that are using AI to get a real advantage over their competition, no matter how big they are or what industry they're in.
I like that. It's about being a detective, not just following the crowd.
Precisely. And that actually connects to the concentration conundrum, too. Instead of putting all your trust in a handful of mega-cap tech companies, spread out your investments across different sectors, different market caps, and even different parts of the world.
Spread the risk, right? Don't put all your eggs in one basket,
Hmm.
especially one that might be controlled by a few really powerful players. Exactly. Now let's talk about that crazy momentum roller coaster. Remember, momentum investing can be profitable, but it's also really risky. That source stressed how important it is not to just chase after those popular stocks without thinking.
So how do we avoid getting caught up in all the hype and making impulsive decisions?
The key is to combine momentum with other things like value or quality. Look for companies that have solid fundamentals, good earnings growth, and maybe even a bit of a competitive edge. That way, even if the momentum fades, you're still holding on to a company with real potential.
So don't just buy a stock because it's going up. Buy it because there's good reason to think it will keep doing well over time. Makes sense.
Absolutely. And remember, through all of this, it's crucial to understand your own risk tolerance, your investment goals, and how long you plan to invest. There's no one right way to do it.
That's such an important point. This deep dive has given us a lot to think about, but in the end, the best investment decisions are the ones that fit your personal situation and financial goals.
Couldn't agree more. And as we wrap up here, I want to leave you with one final thought. What if the biggest thing driving market volatility isn't Trump or inflation or AI or any of the other factors we've talked about? What if it's actually our own behavior, our reactions to news and events, our tendency to get caught up in fear or greed? It's something to think about as you continue your investing journey.
That's a really powerful insight. It reminds us that knowledge is important, but so is knowing yourself and being able to control your emotions. We've covered a lot today, and I hope you're leaving feeling more informed and more confident about navigating the U.S. stock market in 2025.
I hope so too. Remember, stay curious, stay informed, and stay engaged with the world of economics. We'll be back with more deep dives soon. Until then, happy investing.